Belgravia Hartford has a master plan to be able to 5,000x their Bitcoin holdings. My name is Aiden Gillespie, and today we will be going over Belgravia Hartford's strategies and exactly how Belgravia Hartford plans on 5,000xing their Bitcoin holdings. So, getting started, we'll take a look at Belgravia Hartford's goals. They currently hold just under 41 Bitcoin and have a short-term goal of 1,867 Bitcoin, which is a 45x in their Bitcoin holdings. They also have a long-term goal of 210,000 Bitcoin, which is over a 5,000x in their Bitcoin holdings. Now, how will Belgravia Hartford 5,000x their Bitcoin holdings? Well, today we'll be going over the exact strategies that Belgravia Hartford plans on implementing to be able to make this happen. So let's take a look at Belgravia Hartford's recent strategy that they used to purchase Bitcoin with the use of private placements. So with these private placements, they essentially were issuing shares and warrants. For every share issued, you got half of a warrant. So say with the private placements, you were issued 2 shares, you got 1 full warrant. So for every share you got half a warrant with these private placements. The shares were issued at 25 Canadian cents or 18 cents in US dollar terms with a warrant strike price of 50 Canadian cents. And then with that warrant strike price, there was also an acceleration clause that gets triggered if the stock is trading at 75 Canadian cents or above for 10 consecutive days. So with this warrant, essentially what it's saying is that you get these warrants and you're free to exercise them pretty much at any point. So if the stock is trading at, say, 60 Canadian cents, just in this example, you could essentially exercise your warrants and purchase Belgravia Hartford stock for 50 Canadian cents rather than that 60 Canadian cents that it would be trading at that point when it reaches 60 Canadian cents. Additionally, with this acceleration clause, it would essentially force you to either exercise those warrants and purchase stocks at that 50 Canadian cent strike price or to give up those warrants entirely. So, how Belgravia Hartford executed this strategy to perfection. Let's take a look at my little example of how Bitcoin treasuries can effectively dilute shareholders to be able to buy more Bitcoin accretively. So essentially, a Bitcoin treasury can sell shares when the share price is high, which would then dilute shareholders. This would lead to a reduction in share price. And then when share price is reduced, they can purchase Bitcoin with the capital raised from diluting shareholders. And then once they buy Bitcoin, that's going to expand their market cap and it's going to raise the share price back up. Once share price is back up, then you can again sell shares high and then dilute shareholders to raise more money to buy more Bitcoin and just repeat this cycle. So in my opinion, the perfect strategy to execute accretive dilution is essentially diluting shareholders when the price or the MNAV of the company is high, and then buy Bitcoin when the share price or the MNAV is at a lower point. But you don't want to wait too long, otherwise, the share price will stay compressed for too long, and you're just not going to be able to repeat this cycle. So, why I think Belgravia Hartford executed these private placements to perfection. Let's take a look at exactly how they did this. So on July 16th, that was when they closed the private placements, and July 23rd is when they bought bought a majority of that Bitcoin with the capital raised from those private placements. So, taking a look at Belgravia Hartford's price chart, they closed these private placements when the share price was super duper high at about 40 US dollars. And then at that point, they were able to dilute shareholders and then they were able to raise that money from diluting shareholders to be able to buy Bitcoin. And guess when they bought Bitcoin? They didn't buy Bitcoin right when they closed those private placements. They waited a little bit for their share price to go down, for their MNAV to compress, and they bought Bitcoin right when their share price fell to about 21 cents in US dollar terms, which is also very close to the price that the share price that the private placements shares were issued at. They were issued at 25 Canadian cents or 18 cents in US dollar terms. So Belgravia Hartford purchased the Bitcoin with the capital raised from private placements once their share price fell very close to that initial issuance of shares at 25 Canadian cents. So, in my opinion, this was executed to absolute perfection by being able to dilute shareholders when the price in MNAV was really high, and then they were able to buy Bitcoin when the share price and MNAV was much lower without waiting too long, without waiting too long and forcing the price to stay compressed for a while and without waiting too long before Bitcoin's price moves up significantly. So I think everything here was timed perfectly, which is exactly why I ended up purchasing Belgravia Hartford last week. This is not financial advice, by the way. This is simply what I have done and my own research. Do your own research, and your financial decisions are in your own hands. I'm just going over my own research and why I believe that Belgravia Hartford has been executing this to absolute perfection. So now let's take a look at Belgravia Hartford's potential for future fundraising. Quick disclaimer, lots of these methods for future fundraising have already been implemented, but they plan on continuing to implement these plans to raise more money to be able to purchase more Bitcoin in the future. And then they can also expand upon these plans a little bit too as well. So the first plan for being able to fundraise money to buy more Bitcoin is my personal favorite method is convertible bonds with Bitcoin linkage. So essentially what happens with convertible bonds is investors can loan Belgravia Hartford money and receive bonds that can later be converted into equity or shares. So what this does is it raises money for Belgravia Hartford to buy Bitcoin right now while allowing for dilution to occur later on when the share price is likely going to be much higher. Because investors are giving Belgravia Hartford money right now to buy Bitcoin, they are receiving bonds, and then those bonds can later be converted into equity, into shares, which would then dilute shareholders, but they wouldn't necessarily dilute shareholders right away. It would have to happen after those bonds have been converted into equity. So essentially, this allows Belgravia Hartford to buy Bitcoin now and allow for dilution later, which I absolutely love that method. Additionally, there is a protective mechanism using Bitcoin linkage. So essentially, what this allows is for the bonds conversion terms, which can be linked to the price of Bitcoin. They haven't announced, or at least from what I've seen, I haven't seen exactly how they plan on using Bitcoin linkage or how they have used Bitcoin linkage. But essentially, what you would be able to do with Bitcoin linkage is you could potentially can use the terms and link the terms of the bond's conversion to the price of Bitcoin, which would protect Belgravia Hartford in a potential bear market. So, for example, you could have a threshold for Bitcoin's price for conversion of the bonds to equity. So the bonds could only be converted if Bitcoin is at or above a certain price. Then you would only be able to convert those bonds into equity if Bitcoin's price was over or at that certain price. So this would prevent bonds from being converted to equity when Bitcoin's price is low and when Belgravia Hartford would likely be struggling a little bit more. So that's really good because it helps prevent dilution when Bitcoin's price is low and when Belgravia Hartford stock would be probably trading a little bit lower. So that's good that you're not diluting shareholders when the share price is low. It helps to make sure that dilution is only really occurring when the share price is high. So I really like this method. It's my personal favorite method to be able to, for Belgravia Hartford to be able to raise money to acquire more Bitcoin. But there are some other methods that can be used too. For example, notes and debentures. So with this method, Belgravia Hartford could take out loans via notes and debentures to purchase Bitcoin now and then pay interest on the loans taken out. If these are non-convertible, it would completely avoid dilution. They have already essentially used this method by issuing convertible debentures, which are essentially convertible bonds, allowing the debentures to be converted into equity. So, of course, that would be dilutive because it allows those bonds or those debentures in this case to be converted into shares, increasing the total share count. So of course that would be a dilutive method, but it is another method to acquire more Bitcoin. And if the notes and debentures, if they have any way to become non-convertible in the future, that would be another way they could raise capital to buy more Bitcoin while also avoiding dilution. Another method that Belgravia Hartford can use to acquire more Bitcoin is through special securities using Bitcoin native instruments. So right over here on the bottom right of the screen is a list of different revenue streams on Belgravia Hartford's website where they can generate revenue. So they can make money from DEX trading fees, mining pool rewards, mobile wallet premium features, and Bitcoin denominated yield products. So how can these revenue streams power special securities? Well, one method, you could tokenize notes slash bonds, and then you can pay investors from the DEX slash mining pool rewards. So if an investor loans you money, you can give them essentially bonds, and then you can pay interest on the bonds, essentially interest on the bonds using the DEX and mining pool rewards. Or you could use other methods there too from the revenue to be able to pay the interest on bonds to be able to get more capital to purchase more Bitcoin. Additionally, Bitcoin denominated yield products, investors can put in capital and then receive yield that these products are already essentially generating. So that's another way that Belgravia Hartford could essentially generate more money to get more Bitcoin right now. So this is beneficial because Belgravia Hartford would raise more capital to buy more Bitcoin, and investors would receive interest slash yield that's paid out from Belgravia's revenue streams. So Belgravia's could just use money from these revenue streams to pay the interest slash yield on investors' money that the investors loan to them. And that could essentially be almost in a way kind of a free loan. Of course, they would be paying interest, but that interest could be paid out using these revenue systems that Belgravia Hartford already has in place. Another method that Belgravia Hartford could use to acquire more Bitcoin is through strategic equity with selective institutional placements. This was essentially used with the private placements here too. With this, it would sell shares directly to selected institutional investors. And this is beneficial because rather than just choosing anyone, it would select investors that are aligned with Bitcoin and are aligned with Belgravia Hartford. And even if investors were to want to sell shares early, you could include a lockup period that would prevent any short-term selling of shares. So this is just another good way to be able to raise more money while also ensuring that It's through partners that also share a similar vision as you to be able to accumulate more Bitcoin that way there. So these are all the different methods for Belgravia Hartford and how they could potentially use these methods to buy more Bitcoin and get to their goal of 5,000xing their total Bitcoin holdings. That is all I have for you guys today. Thank you so much for watching. If you like this video, if you like the videos I've been putting out, please consider liking and subscribing to support my work and to support the channel.